discussion. So, good afternoon. Our topic for today is gains and dealings. For these gains and dealings, again, we need to learn about your different dealings in properties. So, when we talk about dealings in properties, we look whether we have a gain or loss out of that dealing. So, how do we know if we have a gain or loss on that dealing? We know whether there is a gain or loss on the dealing based on the difference on your selling price to your cost. If the selling price is greater than the cost, we have a gain. If the selling price is lesser than the cost, we have a loss. Now, always take note that a gain is taxed and a loss is deducted. However, as we go through our discussion today, you will learn that your gain can either be taxed through different tax scheme. So what are our tax schemes again? It can either be subject to final tax or subject to regular income tax. If it is subject to final tax, what is the rate? If it is subject to regular income tax, how should we present it? Next, how should we deduct the loss? Should we deduct it in full? Is it fully deductible? Or will we ignore the loss? So these items will be answered throughout our discussion. So what are the topics that we are to learn here in this particular topic or this main topic, gains and dealings. So the subtopics are the capital gains taxation. We call the final tax of our dealings capital gains tax. Next, we also need to learn how to file your capital gains tax. So how do we file our capital gains tax? Later, we will learn. Also, in every dealing, we have your documentary stamp tax. So that is additional tax that we pay aside from the capital gains tax. And next, how do we file your documentary stamp tax? Lastly, we talk about your different dealings in properties. We talk about your different dealings in properties. So other dealings in properties, how should we tax them? Let's start. What is a dealing in property? What is a dealing in property? A dealing in property refers to the disposal through sale or exchange of ordinary asset or capital asset. So when we talk about dealing, that can either be a sale, an exchange, or a disposition. A sale or exchange or a disposition. So what do we sell, exchange, or disposition? So under taxation, we have a different classification of your asset. We have a different classification of your asset. Under taxation, we classify your asset as either ordinary asset or a capital asset. We classify your asset as either ordinary asset or a capital asset. Unlike our normal classification based on our law, we have this normal classification of real property and personal property. And normally, a real property can be an immovable property, while a personal property is a movable property. So for example, land and buildings are real property. Personal properties are your cell phones, your laptops, or your different gadgets because they are movable. In taxation, we classify them as ordinary or capital. Therefore, your ordinary asset can either be real or personal. Your capital asset can either be real or personal. Now, based on this dealing, again, we look whether we have a gain or a loss, whether the gain is taxed or the loss is deductible. So that's we will learn or that we will tackle as we go through. So asset tax classification. Remember, one important thing that we need to learn in your gains and dealings is the classification of the dealings. Remember, we say your dealings is composed of your sale, exchange, or disposition of your ordinary or capital asset. And one thing that is important here is how should we tax the ordinary or capital asset? So what is an ordinary asset and what is a capital asset? What is an ordinary asset and what is a capital asset? An ordinary asset and a capital asset is defined under Section 39A of the NRRC. So we have here, first, your capital asset, and then we have your ordinary assets. So before we proceed in your definition of capital assets, it is more better to define first an ordinary asset. Why? Because here in your capital asset, it says that it is a property, not an ordinary asset. So if that is not an ordinary asset, then it is a capital asset. And it's very hard to define items like that. Therefore, you must learn what is an ordinary asset. So first, we define what is an ordinary asset. An ordinary asset is a stock in trade of the taxpayer or any property that is included in the inventory of the taxpayer. A stock in trade or any other property that is included in the inventory of the taxpayer. In short, this is your inventory. This is your inventory. So what do we mean by stock in trade? When we see stock in trade, this stock is held for buy and sell. Therefore, the stock here is not a mere investment, but rather as a trading or normal course of business. As trading, normal course of business, meaning it is your business to sell and to buy stocks. Sir, what do we mean by stocks here? We call this stocks your different shares of stock. Okay? So if ever we hold those shares of stock as for trading, meaning not for mere investment, then it is an ordinary asset. And any property considered as your inventory is considered again an ordinary asset. Another ordinary asset is an asset or property held for sale to customers. This is still known as your inventory. Sir, what is the difference of item letter A to item letter B? In your item letter A, these are not your ordinary inventory, meaning your inventory normally composes of your merchandise inventory or your manufactured items. But this inventory in letter A is not your normal merchandise inventory. It is not your normal merchandise, but it is considered still inventory. In letter B, these are your merchandise inventories. So that is the difference. But actually, as long as it is an inventory, it is considered as ordinary asset, whether it falls under letter A or it falls under letter B, so long as it is an inventory. Letter C, it is used in trade or business and is subject to allowance for depreciation. So this one is known as your depreciable asset used in business. Take note, guys, that not all depreciable asset is considered ordinary asset. Not all depreciable asset is considered ordinary asset. It must be used in business. It must be used in business. Therefore, guys, if that is a depreciable asset but not used in business, then it is considered as a capital asset. Sure, example. So let's say, for example, you have here a building. A building is a depreciable asset. If you use that building to house your employees for your normal operations, then that building is used in business. If you have a building and you use that building to house your employees to operate the business, that building is considered an ordinary asset because that is a depreciable asset used in business. What if that is a depreciable asset not used in business? For example, you have a building, but that building is not for your business, meaning your employees are not there. You do not operate the business in that building, or that building is merely an investment. If that building is merely an investment and not used for your business, therefore it is a capital asset. Therefore, it does not mean that if that is a depreciable asset, ordinary asset na siya. What do we need to look? Whether it is used in the business or not used in the business. Clear? Next item, real property used in trade or business. So here we have another property, but only a real property, but it must be used in trade or business. So in short, real property use, again, real property used in business. So for example, guys, you have here a land. The land is where your building is constructed. So your building lies on that land. And on that building, we have your normal trade or business because that is your main building of operation. So question, is the land considered a capital asset or ordinary asset? Ordinary asset because the land is now used in trade or business. But if the land is purely for investment purposes or for speculation, so for example, bumili ka ng lupa, hindi mo alam kung paano mo siya gagamitin, gusto mo lang speculate yung value niya, kung tataas ba yan or bababa, we call that one not used in trade or business. Therefore, it is a capital asset. So, guys, when can we say it is a capital asset or ordinary asset? Actually, ito lang yan. It is an ordinary asset if ever it is used in business. If ever it is used in business, ordinary asset. Example, inventory, ginagamit mo yan sa business. Equipment for your production, ginagamit sa business, ordinary asset. Building, kung nasan yung iyong company, that is considered ordinary asset. Okay? How about a capital asset? We consider it as a capital asset if it is not used in business. So if that is not used primarily for your trade or business, then it is considered capital asset. Okay? So why is it important to determine whether it is a capital asset or not? Because once we determine it is a capital asset or an ordinary asset, here lies your taxation. A capital asset is subject to final tax or regular income tax, while your ordinary asset is not subject to the two items. An ordinary asset is always subject to regular income tax. Therefore, it is important to classify it as either capital asset or ordinary asset. Because here in capital asset, it can be final tax or RIT. If it's ordinary asset, purely RIT. And later, we will learn that only certain capital assets are subject to your final tax. Only certain capital assets are subject to final tax. Okay? So let's learn more about the classification of our capital assets and ordinary assets. So what if we have a real estate company? The rule here, guys, is if that is a non-real estate company, change of classification is permitted. Change of classification is permitted. While if that is a real estate company, change of classification is not permitted. Change of classification is not permitted. Why? What normally happens in your change in classification? When we say there is a change in classification, we reclassify it from ordinary asset to capital asset. From ordinary asset to capital asset. So first, we need to determine what is a real estate company. So a real estate company is a company engaged in the buying, selling of real properties, such as land, buildings, etc. So long as they are engaged in the sale, trading, exchange, disposition of real properties, that is a real estate company. Okay? If that is a real estate company, change in classification is not permitted. So bawal yung ordinary asset to capital asset. Sir, bakit hindi pwede sa real estate company? Because normally guys, real estate companies has lots of real property, And normally, these real properties are to be subject either to CGT or RIT. And real estate companies, ano ba yung mga inventory niyan? Land, building, yan yung mga inventory niyan. If ever it is permitted to change, dinadaya na natin yung gobyerno. Why? Malulugi yung gobyerno as to tax. Sir, ba't naman yung gobyerno malulugi sa tax? Mag-change lang kasi siya sa classification. Guys, pagka ordinary asset kasi yan, dalawa yung babayaran niya as to that particular real property. The income tax, which is subject to RIT, and the business tax. Sir, why income tax? That is the tax on the income on the sale of the ordinary asset. While business tax, because that is the tax on the performance of your business as to the buying and selling of real property. So dalawa yan. Pagka ordinary asset ang real estate or yung real property. Pero kung capital asset, yung real property, isa lang yung tax. That is your income tax. At ano yan? CGT lang siya. CGT lang yan. So mas malulugi yung ating gobyerno pagka we permit your real estate to change the classification. Why? Because again, your real estate has loss of this real property, which is normally the subject of CGT. So if we permit them to change classification, we lost taxes. We will lose taxes rather than gaining taxes. We will lose taxes because if that will remain as ordinary asset, we have two tax, income tax and business tax. But if we will permit the change in classification, we will only have one tax, and that is your income tax. Okay, so let's make a rundown of our change in classification. So the first change in classification is ordinary to capital. And take note, it is only applicable to business not engaged in real estate. It is only applicable to business not engaged in real estate. How about if ever we have a real estate business now going to non-real estate business? What is our rule? If you are a real estate business, whatever you will do, there is no change in classification. If you are a real estate business, whatever you will do, there is no change in classification. So here, even if you transfer to a non-real estate business, what will happen to your real properties? Your real properties will still be considered ordinary assets. Therefore, there is no change on your classification. Take note of this, ah. If you are a real estate business, ano man ang gawin mo, wag kang mag-operate, mag-change ka man into non-real estate business, gusto mo mang i-reclassify yan, bawal. Kasi yung real property na yan, yung real property ng real estate business na yan, will always remain as ordinary assets. So whether you will transfer from real estate to non-real estate, that real property is still considered ordinary asset. What if you are unable to operate? If the real estate is unable to operate, take note again, the properties will continue to remain as ordinary assets. The properties will continue to remain as ordinary assets. In short, ano man ang gawin ni real estate business, anong effect dun sa kanyang properties, the real properties will still remain as ordinary asset. When will you be permitted to change classification? Only if you are a non-real estate business. So you can change the classification from ordinary to capital. But if you want to change from ordinary to capital, if you are a real estate business, hindi pwede. Sir, how about if I want to change from capital to ordinary? Wala nang problema doon. Siyempre, mas gusto naman ng gobyerno kung i-change nyo yung capital to ordinary. Mas malaki yung kikitain niya. Kaya wala siyang limitation doon. Maglilimit lang siya from ordinary to capital kasi mas malulugi. Pero kung capital to ordinary, walang problema. Hindi malulugi yung gobyerno. Mas kikita pa siya. Kasi instead of being taxed only on CGT, dalawa na yung tax mo. Pero kung ordinary to capital, dun lang siya malulugi. Okay? So take note of these rules as they are changed in classification. Another rule on your ordinary asset and capital asset as to your classification is the rule on your banks and trust company. So what happens here in your bank and trust company? Your bank and trust company, what is the normal operation? The normal operation is lending or saving. The normal operation is lending or saving. So for example, we have here bank. The bank will lend money to a company. The bank will lend money to a company. So before the bank will lend money to a company will mortgage its property. So this mortgage is in the form of security. So let's say a company will mortgage its land. If ever a company defaults, bank can foreclose, bank can foreclose the land. Bank can foreclose the land. What will happen on the foreclosure? The land now will transfer to the bank. The land now will transfer to the bank. The question now is, what will happen to the land? This land is a real property, right? Will this land be considered a capital asset or an ordinary asset? Is this land considered as a capital asset or an ordinary asset? The answer is ordinary asset. Sir, why is it ordinary asset? Royal property yan. Hindi naman yan galing sa trade or business niya. I mean, hindi niya trade or business yung paghawak ng lupa. Kasi ang trade or business niya ay lending or saving. So bakit ordinary asset siya? Because the land came from the ordinary course of the business. What is the ordinary course? Nanggaling daw siya kasi sa lending. Nanggaling siya dito. So kung anong pinanggalingan ng land na yan will remain kung saan siya. Ang ordinary course mo, ordinary asset. So nanggaling sa ordinary course yung land, edi ordinary asset siya. Kaya nga ang rule, if the real or other properties are acquired by banks for loan settlements, they are considered as ordinary assets. Okay? If that real or other properties are acquired by banks for loan settlement, whether the property is personal or real will remain the same as ordinary asset. Why? Because it came from the ordinary course of the business of the bank or trust company. How about if ever your bank has investment in stocks or other securities? This investment in stocks is purely for investment, not traded, not trading of stocks, not trading of stocks. Therefore, this is not within the trade or business of the company. This is not within the trade or business of the company. Therefore, how do we treat that investment in stocks and securities? It is treated as capital assets. It is treated as capital assets. Okay, so take note. What is important here in your gains or dealings? First, we need to classify it as whether it is a capital asset or an ordinary asset. Because upon classification, we need to know how to tax it. Whether we will tax it in your final tax or RIT. So what are the rules? We say it is a capital asset, guys, if ever it is not used in business. And it is an ordinary asset if ever it is used in business. Okay? So we're clear now on whether the asset is an ordinary asset or a capital asset. Now, next that we need to learn is what is the amount of gain or loss? What is the amount of gain or loss? Take note, what is taxable or what is deductible is the gain or loss. So what is this gain or loss? What is this gain or loss? This gain or loss depends whether the dealing is a real property subject to CGT or other dealings. If the dealing is a real property, we base it on the amount realized. And what is the amount realized? That is the higher between the fair market value or the selling price. If that is your other dealings, we compute for your actual gain or loss. We compute for your actual gain or loss. So we compute for either gain or a loss. When do we have a gain? If the selling price is greater than the cost. When do we have a loss? If the selling price is lesser than the cost. We have a loss if the selling price is lesser than the cost. Take note, what is the tax basis of your gain or loss? We said that in your dealing, if your dealing is a real property subject to CGT, your tax basis is not the gain or loss. It is the higher between the fair market value or the selling price. Well, if that is an other dealing, we compute for your gain or loss. Here, in your real property subject to CGT, what is taxed here is the presumed gain. But for other properties, what is taxed is the actual gain or loss. Why is it presumed gain? Because here on your real property, no computation of gain or loss. We assume that everything is a gain based on your amount realized, which is higher between the fair market value or selling price. While for other properties, we need to compute for your actual gain or loss. So there is now a computation of gain, or loss. Okay, so let's have a round down. So sabi dito, if real property is subject to CGT, what is the basis? That is the amount realized. And what is the amount realized? It is the higher between the fair market value or selling price. How about if that is for other properties? If that is for other properties, we need to know whether that is a gain or that is a loss. When it is a gain if ever the selling price is greater than the cost. When is it a loss? If the selling price is lesser than the cost. Take note, what is the tax basis for real property subject of CGT? The presumed gain. For other properties, the actual gain or loss. Sir, is there a presumed loss on your CGT? No. The gain is always presumed. For your real property subject of CGT, it is always a presumed gain. There is no presumed loss. We proceed now to your capital gains tax. We have said a while back that your capital asset, we said that your capital asset is subject to either final tax or subject to regular income tax. So what is subject to final tax? These are the items of capital gains tax. So the final tax of a capital asset is known as capital gains tax. And there are only two items. First is the sale of real property that is considered a capital asset. Next, we have your sale of securities not traded in a stock exchange. Not traded in a stock exchange. So that is, if ever it is a sale of real property or a sale of securities not traded to stock exchange, it is subject of CGT. The tax is a final tax. But if that is another capital asset, RIT. So we proceed now to your capital gains tax. So what is a capital gains tax? A capital gains tax is a tax on gains presumed. Sabi nga natin kanina, di ba? Presumed gain ang tinatax sa capital gains tax. That is realized by the seller due to the sale, exchange, or other disposition of capital assets. Remember, sabi natin, dealings. When we talk about your dealings, we said it is your sale, exchange, transfer, or other disposition. So long as these items are present, then there is a dealing. Now, if there is a dealing on your capital asset, whether it is considered as pacto de retro sale or conditional sale, it is subject to capital gains tax. Therefore, you will subject to CGT the dealings as to your real property that is considered a capital asset and a sale of your securities not traded in a stock exchange. So if that is subject to CGT, are all sales subject to CGT? Yes, guys, whether that is a sale, exchange, transfer, or disposition. Sir, how about if that is an absolute sale? So we have here your deed of absolute sale. If that is an absolute sale, then it is still subject. What do we mean by deed of absolute sale? It is an absolute sale if ever the transfer immediately transfers to the buyer. So the sale has the effect of immediately transferring to the buyer the subject property. Absolute sale. We also have your deed of conditional sale. That is the conditional sale. What is a conditional sale? This is a sale burdened with conditions. So before the sale will materialize, you must first meet the conditions. So after meeting the conditions, dun lang magta-transfer yung ownership. Dito, may sale, agad yan, transfer. Dito, may sale, i-meet mo muna yung conditions bago magkakaroon ng transfer. Okay? Deed of absolute sale or deed of conditional sale. Last is your pacto de retro sale. What is this pacto de retro sale? This is a sale with a right of repurchase. Sale with a right of repurchase. What do we mean by a sale with a right of repurchase? So once you sell that property, you can also repurchase that property. So for example, A will sell the property to B. A can have the right to repurchase that property sold to B. Okay? So within a specified period. So pacto de retrosale. So whatever is the form of the sale, whether absolute, whether conditional, whether pacto de retro, subject to CGT. If ever, that is a real property considered as capital asset and a security not traded in stock exchange. Clear? Okay, so we started by learning first what is a capital asset and ordinary asset. And then we broke it down now on how do we tax them. A capital asset can be taxed either at final tax or RIT. So what is the subject of final tax? This is the capital gains tax. What capital asset is subject to capital gains tax? The sale of a real property or a capital asset and a sale of security not traded in a stock exchange. Okay? Only two items is subject to CGT. How about, sir, the sale, exchange, or transfer or of disposition of other capital asset? If that is an other capital asset, not a real property or not a securities traded in a stock exchange, then, or security not traded in stock exchange, then we tax it at regular income tax. I hope we are clear with this. We proceed. What dealings or what capital asset are subject to CGT? Nasabi na natin to kanina, di ba? The real property subject of capital asset and securities that is not traded in stock exchange. Take note, securities yung sinabi dito. So pagka securities yan, pwedeng investment in stocks, pwedeng investment in bonds, pwedeng investment in stocks, pwedeng investment in bonds. Clear tayo dyan? If ever security, pwede yang investment in stocks, investment in bonds. But take note, it must be not traded in a stock exchange. Not traded in a stock exchange. So later we will learn what if it is traded and what if it is not traded. So we only have two items. The dealings or the CGT of a sale of a real property that is a capital asset is subject to 6% CGT. Your securities that is not traded on the stock exchange is subject to 15% CGT. What is the nature of a CGT again? A nature of CGT is a final tax. It is in the form of a final tax. Clear? Okay. So let's start now on the CGT of a real property. CGT of a real property. So how do we tax your real property that is considered a capital asset? Real property considered as capital asset, it is taxed on FMB or your selling price, whichever is higher. So, sir, why do we not compute again the gain or loss? Because here it is a presumed gain. Here it is a presumed gain. So we have here FMB or selling price. Whatever is higher, then we have your 6%. Okay. But take note, not all property subject of capital asset, not all real property that is a capital asset is subject to 6% CGT. Okay? Not all real property that is subject of capital asset can be subjected to capital gains tax. So what are the real properties that are considered capital asset not subject to capital gains tax? So the first item here is a land reform. So what is this land reform? A land reform is a program of the government to transfer lands to beneficiaries. So what is an example of your land reform? What is your example of your land reform? The example for your land reform is that of a carp, that is of a carp. So what is this particular CARP? So this CARP is known as your Comprehensive Agrarian Reform Program. Comprehensive Agrarian Reform Program. So what is this Comprehensive Agrarian Reform Program? This Comprehensive Agrarian Reform Program transfers agricultural land to your farmer beneficiaries. So for example, if you are owner of 50 hectares of land, that will be seized by the government through the power of eminent domain, and it will be transferred now to your farmer beneficiaries. So the transfer to your farmer the beneficiaries, although that is a land considered as a real property, capital asset, the transfer now to your farmer beneficiaries is not taxable. It is not taxable on your CGT. It is not taxable on your CGT. Take note of that. Okay? Take note of that. Now, guys, as to another item, exchange of real property for shares of stocks, that is an original issue. This is also non-taxable. Why? Because it is merely an exchange, no realized benefit. Remember, an item of your gross income, there must be a realized benefit. But since this is merely an exchange, since there is merely an exchange, then we do not tax it. We do not tax it. Okay? Next, error in selling of lot. What is this error in selling of lot? This error in selling of lot is in case you sold a particular lot, however, hindi naman pala yon, then you will not tax it to CGT kasi wala namang gain talaga. So, tax mo na lang yung dokumento. So, you pay documentary stamp tax. Okay? So, as to this tax, there is no mention whether this stock is a domestic or a foreign stock. So normally, what is traded on our stock exchange is, of course, either a resident foreign corporation or a domestic corporation. So long as the selling is made here in the Philippines, okay? Ang tinitingnan naman natin dito yung situs eh. Pag nandito sa Pilipinas yung situs ng pinagbentehan, itatax natin siya. Pag traded or not traded. So pag not traded, CGT. Pag traded, it's either that is a dealer of security or a non-dealer of security. Later, we will discuss that. Okay? So, as to your stocks, wala naman mention whether it is domestic or not. So long as it is made or the situs is here in the Philippines. Clear tayo dyan. Okay? So, we have here your CGT on real property. It is 6% CGT. Take note of this. And we have these 3 exemptions, including this one. So another exemption on your CGT on real property. What is this exemption on your CGT on real property? This exemption on your CGT on real property happens if ever your sale is a principal residence. So if ever your principal residence is sold, if your principal residence is sold, will it be taxed? It depends. The answer is it depends. The taxation of your principal residence, whether it will be taxed or not, depends whether you follow these certain rules. What are the rules? First is that this principal residence, the proceeds should be reinvested to purchase a new principal residence. Sir, what do we mean by purchase? Is it only regarding bili talaga ng new principal residence or pwedeng construction of a principal residence? Pwede ring construction. So long as you make use of the proceeds for a new principal residence. Okay? Next. We have, there must be a notice to the BIR within 30 days from the sale of the real property. So we have your sale of real property after 30 days or within the 30-day period, you must notify the BIR. You must notify the BIR. Next, the should be capital gains tax should be deposited to an accredited government bank. It must be deposited to an accredited government bank. What is this should be capital gains tax? It is the capital gains tax on the sale of the real property that is considered a capital asset. That is the should be amount. However, since you are claiming for an exemption, you must follow this rule that you must deposit it to your government bank. Lastly, you must only make use of this once for every 10 years. So let's say that you sold your principal residence twice for this within 10 years. Are you qualified? No, you are not qualified for it kasi kailangan nga once for every 10 years. Once for every 10 years. And take note, who can only apply for this one? Only a citizen or a resident alien. Hindi pwede ang non-resident alien. Hindi pwede ang non-resident alien. Only a citizen or a resident alien. Take note of that. Okay? So here, we have a principal residence that is sold. And take note, the whole proceeds should be reinvested. There must be a notice. There should be capital gains tax should be deposited to your accredited government bank. And it must be once for every 10 years. Once for every 10 years. Okay, let's have an example. So let's say we have here a sale of real property. So we have here your fair market value, 10 million. We also have your selling price of 8 million, 10 million, and 8 million. Are we clear? Okay. So the fair market value here is 10 million, and the selling price is 8 million. So this is a sale of real property. How should we tax it? Let's say our cost is 5 million. How should we tax it? If that is not a principal residence, you tax it at 6% of your CGT. You tax it at 6% of your CGT. So what is your CGT? Your CGT is the higher between the fair market value and your selling price. So what is the higher between the fair market value and the selling price? The higher here is the 10 million. So 10 million times 6%. Our answer here is equal to 600,000. 600,000. 600,000 ba? 10 million multiplied by 6% is, 600,000. Ganyan siya. Higher between the fair market value or selling price. Now, what is the fair market value? What is the fair market value? Actually, fair market value is your zonal value or your fair value itself. Sir, what is the zonal value? Zonal value, remember in our introduction, power of the CAR to prescribe zonal valuations on real properties. So each real property will be determined based on their zones. And based on that zone, we make a value on it. So let's say zone 1 is 500 per square meter. Zone 2 is 3,000 per square meter. So that is the zonal value. That is the amount that is placed by the CIR as to our zones. How about the fair value? The fair value is the market value of the item. Take note, guys, fair market value can either be zonal value or fair value. But if ever, para mas madali siya, kunin nyo yung fair value, kunin nyo yung zonal value, kunin nyo yung selling price. Alin man yung highest dyan sa tatlo, yun yung magiging basis nyo. So in this case, let's say 10 million. So 10 million times 6%, 600,000. If that is a real property not considered as principal residence. If that is a principal residence, how do we tax it? If that is a principal residence, how do we tax it? If that is a principal residence, we say it is exempt. When can we say it is exempt? If there is a notice, if it is availed once every 10 years, if the should be capital gains tax is deposited, and the amount is utilized. And take note, it must be utilized within 18 months. It is exempt. Problem here, if ever one item is not present. If one item is not present, then it is not exempt. Taxable uli siya. If one item is not present, then taxable uli siya. Okay? Later, we will discuss what if the whole proceeds is not utilized. What will happen? What if the whole proceeds is not utilized? If the whole proceeds is not utilized, so for example, you purchase a new principal residence. Our proceeds here is 8 million, right? Our proceeds is 8 million. And you purchase the principal residence only for 6 million. What will happen to your 2 million? So to compute for our CGT, if the whole proceeds is not utilized, what happens here is it is already taxable. So to compute for our CGT, it is equal to your unutilized portion divided by your selling price multiplied by your should be CGT. So in this example, what is the amount of our unutilized portion? So if that is 8 million less 6 million, we have 2 million divided by our selling price. Our selling price is 8 million multiplied by should be CGT of 600,000. So 2 million over 8 million multiplied by 600,000. What is our CGT? 150,000. So we are liable to pay for 150,000 pesos. Ayan. If the whole proceeds is not utilized, it is considered taxable. Thank you. Okay? Binasa ko lang yung message. Anyway, so we have here whether if it is used for principal residence or not. So if ever the whole process is used for principal residence, exempt. If not, then we have a portion taxable. How to compute for the taxable? The unutilized divided by the selling price multiplied by the should be CGT. How to compute for your CGT? It is the higher between the zonal value, the fair value, or the selling price, or the highest between the three. Okay, so we get for the highest to compute for our what do you call this one, for our should be CGT or our CGT. Take note, CGT is applicable to your real property considered as capital asset. CGT is applicable to your real property considered as capital asset. But there are exemptions. First, if that is a principal residence with qualifications, remember the qualifications. If that is for land reform, another item is if ever it is error in selling of the lot, and if that is purely an exchange of your real property for the shares of stocks. In that case, there is no CGT. There is no CGT. Are we clear? Okay. Another item that we need to learn as to your principal residence is the tax basis of the new principal residence. What is this tax basis? This tax basis is the cost of the new principal residence. How do we cost it? It depends whether the process is fully reinvested or the process is not fully reinvested or it is reinvested more than the amount of the process. So let's have an example. We make use of our example a while back. So our selling price is how much again? 8 million. Our fair market value is 10 million. The cost is 6 million. So let's make use of the first example. So assuming we purchase a principal residence for the whole process of 8 million. Bumili tayo ng bagong principal residence at 8 million. What is the tax basis? Tax basis. Okay. So what is the tax basis? So our tax basis here is still equal to the old residence basis, which is 6 million. So if it's fully reinvested, it's still 6 million. We go to the second scenario. What if it is not fully reinvested? If it's not fully reinvested, for example, we purchase a principal residence only for 5 million pesos. How do we compute? Portion reinvested multiplied by old residence basis. So how do we compute for that? So this is the proceeds used divided by your total proceeds multiplied by your tax basis. So in our example, we have here the portion used is 5 million. The total proceeds is 8 million multiplied by the tax basis or cost of 6 million. So we have 5 over 8 multiplied by 6 million. We have here 3,750,000. Okay, so this is the new basis of the principal residence. On the third example, if the proceeds of the sale is reinvested more than the amount of the proceeds. So for example, you purchase your principal residence now worth 9.5 million. So it has an excess, right? So to compute, we have your tax basis before plus your uh, purchase price less your proceeds. So our tax basis before is equal to 6 million. Plus the purchase price before, or the purchase price now is 9.5, and the proceeds on the sale is only 8 million. So what is our new tax basis? So 6 million plus 1.5 million is 7.5 million. 6 million plus 1.5 million is 7.5 million. Okay? So in case the problem will ask you the tax basis of the new principal residence, just get for the tax basis, either it is fully reinvested, not fully reinvested, or more than reinvestment. Are we clear? And as to your capital gains tax, we just compare for the fair market value, which is the fair value or zonal value, and your selling price, get the highest, multiplied to 6%. If there are two or more items as to your real property, then you get the separate zonal value, fair value, and selling price. You get the separate zonal value, fair value, or selling price. Okay? So we're done now, guys, discussing regarding your CGT as to our real properties. CGT on real properties. So this CGT on real properties considered as capital asset. We say we tax it at 6%. But if ever that is for land reform or specialized housing or for principal residence, it is not subject to CGT. It is not subject to CGT. So a question is posed here. What happens to the 600? What happens to our should be CGT? What will happen on our should be CGT? Remember, we said it is to be deposited. Since it will be deposited in case you are exempt, you can of course withdraw it or you can refund that whole amount. Another question is, can you make use of that should be CGT as a tax credit? A tax credit is an overpayment on your tax, happens on your overpayment on your tax. Here in the should be CGT, it is not payment on tax per se. It is only held in trust or held in escrow. So since it is only deposited, what can you do is to refund it rather than to use it as a tax credit. So in case you are wondering what will happen to the amount that is deposited on your should be CGT. Okay, so we proceed. We go now to your CGT on the sale of stock not traded in stock exchange. So on the CGT on sale of stock not traded in stock exchange, it is subject to 15% CGT on the gain. So take note, we compute here your gain. So we compare the selling price to the cost. If the selling price is greater than the cost, it is a gain. How about if the selling price is lesser than the cost? Should we report it as a loss? You should still report it. You should still report it. However, there is no tax in it. However, there is no tax in it. So in your stocks, you need to learn whether it is traded or not traded. It is traded or not traded. What do we mean by traded here? We mean as it is listed in the Philippine Stock Exchange. Sir, ano yung listed? Alam niyo yung mga nakalagay doon sa ating stock exchange, yung may mga pangalan doon, AAPL, ganon. Tapos, basta yung mga accredited ng Philippine Stock Exchange, yung stocks nila, they are listed in the Philippine Stock Exchange. So if ever you want to see the corporations which are listed, you just go and visit your Philippine Stock Exchange website. Now again, if ever we have a gain, it is taxed at 15%. But what if we have a loss? We will still report it. We still report it. Because here in your CGT, on your sale of stock, we have a transactional and annualize. What is transactional? We report any gain or loss. If there is a gain, tax at 15%. If there is a loss, you just report it. And for annualized, we compute for the net gain or loss. And that net gain or loss will be multiplied to 15%. Ganon pagka stock. Unlike in your capital asset, that is a real property, it is only transactional. Here, it is both transactional and annualized. We go now to your stocks. It is either not traded or traded. If it is not traded, it is subject to CGT 15%. If that is traded, we look whether the seller is a dealer or non-dealer. What do we mean by a dealer or a non-dealer? When we say dealer, you your main business is to sell and purchase stocks. You are a dealer if your main business is to sell stocks. Therefore, the gain here is considered an item of regular income tax because it is considered as your normal business. But if you are a non-dealer and the stock is traded, every time you trade it, you are subject to stock transaction tax. You are subject to stock transaction tax that is 60% of 1%. So what do we need to look into our problems if ever we are confronted with stock? You look whether it is traded or not traded. If not traded, CGT yan. If it is traded, look whether it is dealer or non-dealer. Pag non-dealer, is stock transaction tax. Pag non-dealer, is stock transaction tax. Okay? So just make use of whether it is really a stock traded or non-traded. But take note, please do not confine yourself with stocks only, because we say a security can be subject to CGT. And when we say CGT, as to security, that can be stock or that can be a debt investment. So investment in stock or investment in debt. Clear? Okay. Next, we compute for your gain or loss. So how do we compute for your gain? Of course, the selling price is always given. You can easily infer the selling price. How about the cost to compute for the gain or loss? Your cost is equal to the cost of the stock. The cost is equal to the cost of stock plus any expenses on the sale plus the documentary stamp tax. Take note, the documentary stamp tax on the sale of your stock should be part of our expenses. The documentary stamp tax on the sale of the stock should be part of our cost. Ayan, cost is equal to your cost of the stock, expenses, and DST. We'll have an example later on this CGT on sale of stock after we learn about DST because we cannot compute of the cost if we do not know how to compute for the DST. Okay? Now we go to the filing of CGT. So how do we file your CGT? We have your 1706 and 1707. So Form 1706 and Form 1707. 1706 is used for real property classified as capital asset. And 1707 is used for shares of stock not traded through a stock exchange. And when is the deadline? 30 days after the sale, exchange, or disposition. So whether it is shares of stock or a real property, deadline is 30 days. That's the reason why also in your principal residence, you need to provide information within 30 days because here our deadline is 30 days. So again, what is the tax on your capital asset real property? 6%. What is the form? 1706, deadline 30 days. How about shares of stock not traded through a stock exchange, 15%? What is the form? 1707. And when do we file it? 30 days after. Okay? So please take note of these forms and the deadline. We go now to the DST. So what is a DST? A DST is a tax on the document. So what is the document here? Remember, we have your deed of absolute sale or deed of conditional sale or de facto de retro sale. These are the different documents here. These documents entitle for the sale or transfer of the property. Since these particular documents entitle for the sale or transfer of the property, it is now subject to DST. Because here, if we look into the definition of DST, DST is a tax on documents which evidence the sale or transfer of an obligation, right, or property. So here, our deed of absolute sale, deed of conditional sale, or our pacto de retro sale are the documents which now evidence the sale or transfer of property, therefore subject to DST. So what is our DST rate? So our DST depends whether it is the sale of the real property or the sale of the stocks. So this again is the real property considered as capital asset. Here is stocks not traded. At some point, when you say not traded, it is directly to buyer. Directly to buyer. Why? Because you don't need to list it now in your stock exchange to be sold. You sell it directly to the buyer. So it is not traded, it can be directly to the buyer. Okay, so for the DST on the real property, our rate is 1.5%. Our rate is 1.5%. Sir, why is it 1.5%? Why is it 1.5%? Because guys, here, for each 1,000, 15 pesos. So in short, 15 over 1,000 is 1.5%. So instead of memorizing the amount, then you just memorize the percentage. Why? Because guys, rarely do you see now a real property that can be sold at less than 1,000. May makikita pa ba tayong lupa na pwedeng ibenta less than 1,000? Wala na ngayon. It is more than 1,000. Therefore, you use this percentage, 15 over 1,000. Pero kung less than 1,000 yan or equal to 1,000, you will pay 15 pesos. So what is the basis here? The consideration. The consideration. So here, selling price multiplied by 1.5%. Selling price multiplied by 1.5%. Yan yung gagamitin natin. Clear tayo dyan? Okay. Next, how about your DST on the sale of shares of stock? It depends whether it is an original issue or transfer of stocks. If it's an original issue, 2 per 200 or 2 over 200, or this is equal to 1%. If that is a subsequent issue, it is 1.5 over 200. 1.5 over 200 or 0.75%. So you need to determine whether it is an original issue or it is a subsequent issue. Let's have an example on your DST on real property considered as capital asset. So we have here the fair market value of the property is 9 million. The selling price is 8 million and the cost is 5 million. What is the CGT? So CGT, the basis is the higher between the fair market value or the selling price. Higher is 9 million. We multiply it to 6%. So 9 million multiplied by 6% is equal to 540,000. How about the DST? The DST is the consideration. Why? Because what we tax here is the document. Alin ba yung nagpapakita sa document? Yun yung selling price or the actual consideration. Therefore, ang gagamitin natin sa DST, hindi yung higher. It is the consideration, which is 8 million. So 8 million multiplied by 1.5%, that is the amount of our DST. That is the amount of our DST. So this is equal to 120,000. Okay? So that's for real property. Take note, DST is based on the consideration, not the higher between the fair market value or selling price, because the higher is only applicable to the CGT, not applicable to the DST. Now, how about on your DST of the share of stocks? DST on shares of stocks. So A corporation will originally issue a share to X. So A to X. The par value of the share is 200,000 and A sold it to X at the amount of 400,000. Now, X in turn, after holding the share, let's say, hinawakan niya lang ng 30 days, binenta niya na yan kay Z. binenta niya kay Z. The selling price of X to Z is 500,000. 500,000. Now, how do we compute your DST on shares of stock? From A corporation to X, A corporation is the issuer, right? A corporation is the issuer. Since A corporation is the issuer, what do we do? Since A corporation is the issuer, this is the original issuance. Since A corporation is the issuer, this is the original issuance. So since this is the original issuance, the DST here is the 1%. The DST here is the 1%. Okay? How about the transfer to X and Z? The transfer to X and Z is subject to the subsequent transfer, which is 0.75%. So how do we base it? Based on the par value. Based on the par value. What is the par value on A corporation to X is still 200,000. So 1% of 200,000 is equal to 2,000. How about the 0.75% of 200,000? Kasi it is based on par value. Hindi naman magbabago yung par value niyan, di ba? It will still be 200,000. 200,000 times 0.75% will give us 1,500. 1,500. That is the difference. That is the difference. If ever it is initially issued, then it is subsequently issued. If it's original issue, 1%. Subsequent issue after that, so X to Z, may subsequent issue na si E Corporation dyan, ang kanyang DST ay 0.75. So how do we compute now for the gain? How do we compute now for the gain? So A to X. A to X. What is the selling price? 400,000. So what is the cost? The cost for A corporation is the par value, the 200,000, plus, of course, the DST. What is the DST of A? 2,000. So this is 202,000. So we have here 198,000 multiplied by 15%. What is the CGT of A to X? So 198,000. So 198,000 multiplied by 15%. So we will get 29,700. How about the CGT of X to Z? CGT of X to Z. The CGT of X to Z, we get first for the selling price of X to Z, that is 500,000. So what is the cost of X? The cost of X is the purchase price from A. So magkano ba binenta ni A kay X yan? 400,000. So yun yung cost ni X. Plus the DST of 1.5. Kasi ang DST ni X to Z ay 1.5, isasama yan sa cost natin. So this is 401,500. So 500,000 less 401,500 will give us 98,500. Multiplied by 15%, then we can already compute for our CGT. The CGT is 14,775%. Okay? So it is computed based on 15%, but take note, as part of our cost, we deduct the DST. We deduct the DST. Now, I said a while back that your DST can either be transactional or annual. Transactional or annual. Actually, it must be always transactional because normally we have only gains. Wala naman talagang loss. Pero paano pagka may loss? Mag-annual tayo. Mag-annual tayo. So, kailangan mag-annual pa rin tayo whether or not you are an individual or you are a corporation. But actually, it is more of a corporation kasi sila talaga yung nag-i-issue ng mga stocks. Pero yun nga, pwede rin naman na yung annual nag-hold ng stocks na traded in stock exchange. Pwede rin naman yun. Pwede rin naman yun. Okay? So, the transactional or annualized can be both for your individual or corporations. It does not specify. Actually, the transactional or annualized is applicable before because we have a two-tier tax. We have a two-tier tax that is 100,000, 5%. If the gain is 100,000, 5%. If the gain excess of 100,000, 10%. Ganun kasi dati. Pero ngayon kasi flat rate na siya, 15%. So normally, it is only transactional because we only have a gain. But what if we have a loss? We can annualize it. So what will happen to the excess payment? It will be used as a tax credit or it can also be used as a tax refund. So pagka may excess kang binayaran, dalawa lang yung gagawin. Pag may excess kang binayaran, dalawa lang yung gagawin. It's either meron kang credit or refund. Lagi niyong tandaan yon. Pero dun sa CGT kanina, sa real property, hindi yun refund. Kasi wala ka naman talagang binayaran. It is only held in trust or held in escrow. So, pwede mo pa rin yung kunin. Okay? Take note, we are already discussing train law. We are already discussing train law. We are not discussing the old law. So, lahat ng dinidiscuss natin, applicable for train law. And we cannot have any transactions na not pertaining to train law because a sale should be done this year and reported within 30 days. Therefore, what you make use is train law already. Train law. Okay? Train law. Now, after knowing your DST, oy, tandaan nyo yan yung DST is part of the cost. Pag mali kayo ng deduct dyan, nako, mali ang sagot ninyo. Mali ang sagot ninyo. So yung DST, tandaan nyo itong DST na to. 1% pag original, pagka subsequent sale, 0.75. Okay, so how do we file our DST? It is your BIR 2000 OT. So form 2000 OT. What is OT? One-time transaction. When do we file it? Within 5 days after the close of the month. So for example, the sale happened on January 5. When do you report it? You report it after the end of the month. So what is next month? February. February 5. That is the due date. Clear? What if the sale is made on December 31? What is the next month? January, within 5 days, so until January 5. So kumbaga, next month, plus 5 days. Kung doon sa CGT natin kanina, whether 1706 or 1707, day to day plus 30 days. Yun yung rule. Dito naman, next month plus 5 days. 1706, real property. 1707, that is used for stocks. Okay? That is used for stocks. We go now to your dealing subject to RIT. Dealing subject to RIT. What are these dealing subject to RIT? Take note, guys. We have here your capital asset. That is either CGT or RIT. And we have your ordinary asset. We have your CGT or RIT. Hindi. Pag ordinary asset, RIT lang yan. Pag ordinary asset, RIT lang yan. Okay. Pagka capital asset, dalawa lang yung CGT natin, di ba? Real property considered as a capital asset. And then, we also have your stocks not traded in stock exchange. All other capital assets are subject to RIT. How about an ordinary asset? It is always subject to RIT. Now, for your capital asset, we call it your net capital gain and net capital loss. For ordinary asset, we call it ordinary gain or ordinary loss. Ito na yung kailangan natin sagutin kanina. Kailan ba natin itatax yung gain at kailan ba natin i-fully deduct yung loss? If that is an ordinary gain, it is fully taxable. If it's ordinary loss, it is fully deductible. But a net capital gain is also taxable, but a net capital loss can either be deducted or ignored. It can either be deducted or ignored. So, sa income tax return ninyo, meron tong items na to. Ordinary gain, ordinary loss, and we have your capital gain. So, these are the items on your dealings. Walang capital loss. Walang capital loss. Kasi it's either deducted or ignored. Mamaya malalaman natin kung paano siya i-deduct. So walang problem sa ordinary asset. Ordinary gain is fully taxable. Ordinary loss is fully deductible. However, for your capital assets, we have 3 rules. We have 3 rules on your capital asset. So the first rule is the holding period rule. So what is this holding period rule? So this holding period rule tells you the percentage taxable or deductible based on the gain or loss. It is the percentage taxable or deductible based on the gain or loss. So this holding period rule is applicable to individuals, but not to corporation. Okay? It is applicable to individuals, but not to corporation. So what is our holding period? The holding period is less than 1 year or equal to 1 year or more than 1 year. If it is less than or equal to 1 year, it is considered a short-term holding. It is 100% taxable or deductible. It is considered a short-term holding. It is taxable or deductible. Next, if that is more than 1 year, it is considered a long-term holding. Long-term holding. It is 50% taxable or deductible. Take note, this applies only to individuals, not to corporation. And finally, it only applies to capital asset, not to ordinary asset. It only applies to your capital asset or only capital asset, not to ordinary asset. Not to ordinary asset. Okay? We go now to your example. So let's have an example for you to understand this holding period rule. So let's say we have here short-term or the short-term capital gain, short-term capital loss, long-term capital gain, long-term capital loss, short-term ordinary gain, long-term ordinary loss. So let's say this is 100,000, 50,000, 500,000, 300,000, 20,000, 50,000. Okay. So if the question is how much of the dealings in properties should be included in our taxable income? Okay. So you need to determine whether that is an individual or a corporation. If that is an individual, what is the rule? It is subject to holding period. 50% for long term, 100% for short term. That is for capital asset. While ordinary asset, taxable in full and deductible in full. Okay. So, short-term capital gain. Since short-term yan, subject to holding period yan kasi nga individual siya. What is the rate? 100%. So, 100,000 multiplied by 100% will give us 100,000. Next, we have your short-term capital loss. Short-term capital loss. Under your short-term capital loss, that is based on your 50,000 times 100%. 50,000 times 100%, so this is 50,000. We have your long-term capital loss. Long-term capital loss and long-term capital gain. So long-term capital gain We have here 500,000. Pag long-term capital gain, ano yung ating percentage? 50%. So this is 250,000. Next, long-term capital loss. We have 300,000. Since long-term siya, anong percentage natin? 50%. So this is 150,000. Short-term, ordinary gain. Whether it is short-term or long-term, wala tayong pakialam. Pagka-gain yan, taxable. So add mo yung 20,000. Long-term, ordinary loss. Loss yan, wala tayong pakialam, basta ordinary, full deductible. Okay? So how much is the taxable dealings in properties? So the taxable dealings is 100 plus 50, 50,000 plus 250, 300, less 150, 150, less 50, 100 plus 20, 120,000. So our answer here is 120,000. That's for individual. How about if that is a corporation? Is holding period not applicable? Is holding period not applicable? Yes, holding period is not applicable. So whether it is long-term or short-term, it is 100%. How about ordinary gains or losses? It's still 100% because it is taxable and deductible in full. Okay, so short-term capital gain. How much is our short-term capital gain? 100,000. Short-term capital loss. How much is our short-term capital loss? 50,000. In full yan. Long-term capital gain, in full pa din. Long-term capital loss, in full pa din. Short-term ordinary gain, in full pa din. Long-term ordinary loss. Long-term ordinary loss is still at 50,000. Long-term ordinary loss is still at 50,000. So how much is our taxable dealings? Our taxable dealings is equal to, this is 500,000 pala. This is 500,000, this is 300,000, and this is 20,000. So this will give us 220,000. 220,000. Take note of this holding period rule. So under our holding period rule, again, this applies only to capital asset and applicable to individual. It is only applicable to individual. What is the holding period percentage for long term? 50%. For short term, 100%. How about ordinary gain or loss? Taxable in full and deductible in full. Okay? Holding period rule. Another rule is capital loss limitation rule. Okay? Here, the net capital loss is to be deducted to the extent of the net capital gain. The net capital loss should be deducted to the extent of the net capital gain. What will happen to the excess? What will happen to the excess? If that is a corporation, it is already ignored. But if that is an individual, it is still taxable. If that is an individual, it is still taxable. If that is a corporation, ignored. If that is an individual, it's still taxable or deductible. We call this one as your net capital loss carryover. Net capital loss carryover. Net capital loss carryover. Okay? Now, let's say you have here your net capital gain. And then we have your net capital loss. So assuming our capital gain is 100,000, so assumption number 1, our capital loss is 50,000. Can we deduct the capital loss? Yes. What is the taxable income on the dealings? Taxable income on the dealings is 50,000. What if our next assumption is our net capital gain is 100,000? Our net capital loss is 120,000. We have a negative 20,000. Can we deduct that? Can we deduct that? No. So your taxable income on the dealing should be 0. What will happen to your excess? If that is a corporation, you ignore it. But if that is an individual, you can deduct it by making it as your net capital loss carryover. Therefore, to properly discuss this capital loss limitation rule, we must also learn the net capital loss carryover rule. So, how many years can you carry over? You can only carry over for 1 year. You can only carry over for 1 year. Okay? You can only carry over for 1 year. And then this net capital loss carryover, you already know this one as the excess net capital loss, di ba? Yun yung sabi natin kanina. Paano kung may excess? Ano mangyayari? Net capital loss carryover. But this is only applicable for individual. It is only applicable for individual. Okay, so we have here your net capital loss carryover. It is your excess net capital loss. This can be only carried over for 1 year, and we have a limit. So what are the limit? Whichever is the lower by the net capital loss carryover, the taxable income at the date the net capital loss is sustained. And third, the net capital gain on the subsequent period. Okay, so let's have an example. So 2020, 2021. We have here your taxable income before dealings. Let's say 100,000 and 120,000. We have your net capital gain and we have your net capital loss. Okay. If that is a net capital gain, let's say we have a net capital gain of 150,000 and a net capital loss of 190,000. Hindi, palitan natin. 240,000 net capital loss. On 2021, your net capital gain is 250 and your net capital loss is, let's say, 175,000. Okay, so assuming you are an individual. So 2020 and 2021, taxable income. We have 100,000 and 120. So do we have any net capital gain? Kasi nga, net capital loss, hindi yan lalabas. Do we have a net capital gain on 2020? No, this is loss of 90,000. But since you are an individual, you can carry that over. We call that your net capital less carry over. Net capital loss carry over. So what is our net capital loss carry over? 90,000. So zero yan. Okay, next. For 2021, since we have a net capital loss carryover, how do we compute for your net capital loss carryover? Can we deduct it? Yes, we can deduct. We can deduct. But what is the limit? The amount of the net capital loss carryover, the taxable income at the date of the net capital loss is sustained, and the net capital gain on the subsequent period. Okay, so what is our net capital loss carryover? 90,000. What is the taxable income at the date the net capital loss is sustained? So 2020 yun, di ba? 100,000 yan. And what is the net capital gain on the subsequent period? Our net capital gain on the subsequent period is, we net this one, 250 less 175 is 75,000. So what is the lowest? The lowest is 75,000. So our limit here, we can only deduct a net capital loss amounting to 75,000. So 75,000 less 75,000, zero. So zero na naman yung net capital gain natin. So how much is the taxable? 100,000 and 120,000. That's for individual. But what if you are a corporation? Do we have an NCLCO? Nothing. So 2020 and 2021. So what is the taxable income on 2020? 100,000. 2021, 120,000. And then, do we have a net capital gain on 2020? Wala, kasi negative yan na. Negative 90, so zero yan. Is this negative 90 to be carried over for the next period? No, because we are a corporation. And since we are a corporation, we do not carry over a NCLCO. So how much is our net capital gain here? 75,000. Wala tayong ibabawas na net capital loss carry over. So how much is our taxable income after dealings? 2020, 100,000. 2021, 195,000. Nasundan? Okay. So again, we have these three rules. Holding period rule. We have here individual or corporation. Applies to individual, not applicable to corporation. This is regarding your capital asset as to whether it is a gain or loss. If short term, 100%. If long term, 50%. Capital loss limitation rule applies to individual and corporation. It means that you can only offset the net capital loss to the extent of net capital gain. What if there is an excess? If there is an excess, if that is an individual, we can treat that as net capital loss carryover. But if you are a corporation, what is the effect? If you are a corporation, you ignore that excess. Next, your net capital loss carryover, applicable only to individual, we say it is not applicable to corporation. And this net capital loss carryover has a limit. That is the amount of the net capital loss carryover or the amount of the net capital gain on the subsequent period, or it is the amount of your taxable income on the date the capital loss is sustained. On the date the capital loss is sustained. Okay? So, again, these are the rules on your dealings in properties as to your capital asset. How about on your ordinary asset? Do we have any rule? If that is the gain, walang problema, 100% taxable. If that is a loss, wala pa ring problema, it is 100% deductible. Tandaan nyo lang yung items dapat ng ating gains or dealings in properties as to our asset. So we have here your ordinary gain, your net capital gain, and then we have your ordinary loss. Hindi magpapakita ang net capital loss because of the capital loss limitation rule. Because of the capital loss limitation rule. Okay? So, doon lang tayo muna sa basics. When we go through foreign corporations and your corporations per se, doon tayo mas lalong magdodwell on it. So, basic muna tayo na capital gains tax rates, whether it is 15% or 6%, and basic dealings in properties. Dealings in properties. Okay? That's it. That's the end of our topic as to gains and dealings.